Hey y'all, this is Audra Hicks, your Tennessee real estate professional, and I have my friend Jake. So you want to introduce yourself?
Yes, hi everyone. I am Jake Caldwell with CrossCountry Mortgage. I'm a loan officer handling purchase loans and refinances.
So what all types of loans do you do? Do you have VA loans, FHA? Do you do all types, or do you just specifically like one
Yes,
thing?
we truly have it all, from your first-time home buyer to your experienced buyer. Because we are the nation's #1 retail lender, we have a wide range of different loan programs that we can handle, whether it's your conventional, your conforming, or for those more trickier situations for self-employed folks.
That's what I was going to ask you too, yeah.
That have a great CPA and follow all the legal manners to write off as much as possible. We help a lot of those folks qualify for the house that they want to get into.
Okay, that's good to know. So any of my buyers that are first-time home buyers out there, I can send them to Jake and he can help you with that. So what about talking about that? Credit. What do you have to have? A lot of people think you have to have really high credit or 620 or 780 or whatever it may be.
Yeah.
So tell me what ranges are good and for what type of loans, because I know every loan is different too. So
Yes, absolutely. So we do have a wide range. So actually the bare minimum credit score is typically going to be 580. Now if you do have a down payment, something to work with, you may potentially be able to qualify for a mortgage as low as $500 with a 10% down payment.
Okay.
So
now are they able to get that in gift funds? And we can talk on that too and tell everybody what that means.
Yeah, so 580 and up, obviously the better credit that you have always helps with the interest rate and closing costs. But you'd be surprised, people with negative history, they don't get hit as bad as you would think. So don't let bad credit scare you from at least exploring what options you have. You may be surprised what you can get into.
Okay. And with that being said, I have ran into buyers that have no credit. So what do? Do you help them build their credit at that point?
Yes. There's actually ways that we can overcome no credit whatsoever. Plus, if it's kind of an early start, I can help guide the path to get that initial score built over, so we can build a healthy credit score for not just for a house, but just for future purchases that you may want to have.
So what do they need? Kind of documents do they need for that kind of thing? Like where they've paid electric bills or phone bills and things like that to help?
Yes. Recurring monthly payments, whether it be a lease, car payment, cell phone bills, utility bills. We can use that as non-traditional credit to help get you qualified for a mortgage.
Or rent. And
yes.
Did you say rent?
Yeah, lease. Yeah, absolutely.
Yeah, that's cool. Mm-hmm. So 580 up to whatever. So if you have 800 or above, can you get basically anything you want?
Typically, yes. Actually, typically if you have 580, that is the best score that you can have. Anything above that is just kind of showing off.
800 or 850. You said 580 is the best one we can have.
780 is the best you can have for a mortgage.
780. Yeah.
Yes. Okay. Anything above that is just showing off.
Yeah. Well, we show off sometimes, but hey,
it's good to show off.
It's good to have that.
Yes.
But that goes to show that you have a wide range of things for everybody out there, and sometimes you have bad credit because it's a divorce situation, or what about a bankruptcy though? If somebody, because I think one of my clients had talked about having a bankruptcy, and I said, I think that's okay. It depends on what type of loan. So what do you do with those?
So each of the conforming loans, that'd be conventional, FHA, things like that, they have their own, whether it's 2 years to 4 years. Okay. But the great thing is, I mentioned CrossCountry Mortgage, we have it's called a non-QM loan. Okay. And so they're loans that we fund ourselves and we make the rules. So if you don't fall within that original time period, we can go to our management and say, hey, look at this client. It's a little more common sense, a little more old school underwriting. If we lay out the story, if it makes sense, we can help you get into that home.
So doing a letter of explanation and figuring out what
Yes,
the
yes.
case was.
Yes, some extraordinary circumstance happened, and we can see, you know, from that point, we've had great history.
Yeah.
You know, if there's additional money in the bank, additional assets, some other compensating factors that we can show to paint a good picture that would make sense for us to lend on that.
Yeah, yeah. So Jake, I'm going to ask you, what sets you apart from other lenders? You know, and what do you do differently? Which, you know that I'm a communicator, so I have to have communication and stuff. So
yes.
So tell me.
Well, I would say the difference that I have is that my attention and problem-solving skills to each client. Like I said, we have so many different opportunities and loan programs for each client, so I really dive deep on each client to find the best product for them, not just for the short term, but also the long term.
Okay.
And with that, you know, my problem-solving skills for those people that have a, you know, somewhat of a checkered financial past.
They'll remember you when
Yes.
they get in their house and they want to refi later, or they want to sell and buy again too.
Well, I mean, last month I had a client that said, I'm the first person in my family to ever buy a home.
I know, I've had that. That makes your heart happy.
That is the most rewarding feeling whatsoever.
That is. Yes.
But from the get-go, we are fully transparent about the whole process, because this is one of the biggest moments of your life, buying a home. And so from start to finish, we set the proper expectations up front, going over all the numbers, going over the payment. That way you are fully prepared. You know, being a mortgage lender myself, buying a home myself, it can be stressful at times. So I understand that, and I want to give my clients the best experience possible. You know, over communicating what is going on so they fully understand the whole transaction.
And then you don't just close up shop at 5 p.m. every day and say we're done.
No.
So
my wife wishes. No.
My hubby does too. No, they all know that we love what we do.
Yes.
So that's par for the course.
No, this is my business, and I truly want to be there for my clients when they need it most. I understand that a lot of people, they do have their 9 to 5, and so the best time for them to talk with us or speak with us is afterwards, nights or weekends, sometimes even holidays. So you know, that's a part of the business, and we fully understand that.
As my hubby says, I work 8 days a week.
That's exactly right. 25 hours a day.
8 days a week.
Yes.
Yeah. So typically, question here, talking about down payments, what I know there's loans that's 0 down, but you have your down payment and then you have your closing cost. Okay, so what is the down payments? Everybody thinks they got to put 20% down. So I wanted to go over that today to let people know you don't have to. So
no.
Can you touch on that a little bit?
Yeah, anything but that. There are many 0 down programs, whether it's a USDA program, that's a government insured rural home program that is not just in the rural parts, but that's 0 down. But there's also down payment assistance programs where you come in with a 0 down payment. Now with that, there are closing costs required on the purchase of a home. But the great thing about the market that we're in is that, you know, when you have a great agent, you have a lot of negotiating power.
Right.
So many times I have clients that come in with 0 out of pocket to buy a home, which, you know, no one would ever think that that's possible.
But it happens. So yes. Yeah, or 500 is all they have had to put down, or you know, go get their home inspection done and that's it. And
yes, exactly.
They've gotten a check back at closing. I've seen that.
Yes.
So, that's always
So if you're limited on funds from the bank, there are those options. Plus, we can talk about exploring other options, creative ways to get financing done. But even if you don't have down payment assistance, to get into a home, we're talking 3% down, 3.5% down. So nothing crazy out there to get into the process of getting a starter home and to start building that equity and wealth for the long term, for that next step up.
Versus renting. which
yes,
is 100%.
100% interest.
100% interest. I try to tell people that all the time. And they're like, yeah, but I don't want to pay that. I just said it's 100% interest that you're paying on rent. So you have that. So when somebody really wants to figure out things, do you have a way, I know you do, so do you have a way to look up their credit and run it and say if they're at 550, how to get to the mark that they need to be for whatever loan it is?
Absolutely.
Okay.
So from the beginning of a pre-approval application, we take a look at your credit. Now, if it's not where it needs to be or you're in the early stages, we're going to review that credit with you and then come up with a game plan to get that score up to maximize when that time is right. And so we have a system where it will give you a custom credit plan for you to follow to, take it up to the next step. Maybe you're at a 680, but you want to get to a 740.
Right.
What does it take to get there? How long does it take to get there? And,
I tell people I got people for that.
Yes,
so
yes.
There's Jake for that.
Yes,
he can get you there.
I'm looking at credit reports all day and I see what works and what doesn't. And, sometimes you think that you need to pay off a bill that you don't.
Yeah.
And so we take step by step with you to build up that credit for when that time is right.
Right. So that's always a good plan to do, even 3 months before you think you're ready. Have him pull it, figure it out, because it may take you a month, 2 months, 3 months to get to where you need to be. Sometimes it might be a week or two. I mean, who knows?
I mean, honestly, I suggest 3 to 6 months before you even think about it, because you never know when that dream house is going to pop up, and you don't want it to be a regret that you missed out on that house just because you didn't think you were ready.
Right.
If we do a pre-approval and it expires, it's not.
How long are those good for?
Those are good for 120 days, so they're good for 4 months.
There you go.
And so it's easy to refresh those as well. So it's not a whole lot of work on your end as well. It's just keeping that fresh so you're ready to make that offer when that property does come up.
Right. Because if we start seeing more of a seller's market and move into that, we're going to need to get everything done. I mean, you've got to get on it to do that.
Yes, and if you're looking for a particular type of house that's in a good school district or has land or is on a golf course, some of those houses do move quick. We still see houses go off the market in 1 day.
Yeah.
And so if you are looking for something specific, it is good to have that pre-approval ready.
Yeah, have it ready. I mean, do you even have loans that help the investors out there if they want to do investment properties and stuff?
Yes,
because
yes.
I have investors as well. So
yeah, we have a wide range of products for investors. We have fix and flip loans. We have long-term loans. We have what's called cash flow loans. Essentially, it's debt service coverage ratio, where we don't take a look at your income to see if you qualify. We take a look at the property.
the asset of it.
Yes. We take a look at the potential rents versus your mortgage payment, and that's it. So
such as like you wanted, like me and my hubby and son, we're gonna buy STRs, which are short-term rentals, over in Pigeon Forge, Gatlinburg. So that would be
a great option.
A great option for that kind of thing.
Yes, and our company uses a certain data program that takes a look at STRs, short-term rentals, incomes. That way it makes more sense, because if you're looking at long-term versus short-term, those numbers may not work out the same. So if we can go in saying it is going to be a short-term, we can find the data, the historical payments for that STR, then we can make that house work.
Okay. So if it's an STR that's just been built, but so they'll just project off of other ones in the area is what they.
Exactly. Yeah, okay. There's a lot of data there that they can pull the historical from the other similar units nearby to come up with that income.
And then traditionally, what do you have to have down on those kind?
Typically, it's going to be, the minimum is typically 20%, but to be honest with you, these days, with a little bit higher interest rates, it's going to make more sense doing about 25 to 30% down.
Yeah, yeah, especially if it's higher interest rates too. So, is there anything we haven't touched on, Jake?
Oh my gosh. Well, I would say, a lot of people are wondering what's going to happen this year.
Yeah.
There's an election that just happened.
Yeah.
What does that mean for us? And I would say that if you're trying to time the market, I always say that I'm not Warren Buffett and no one else is. Don't try and time the market.
No.
Historically, real estate is a great asset to hold. Some years it jumps up high, some years it jumps up low, but it rarely drops.
Yeah.
And so this next year, I think that we'll see some looser regulations. I think that will spur the economy a bit more.
And where do you think potentially the interest rates might head to? We don't. It's scary to even
my
answer
crystal
that,
ball has been off for the last
we
couple
don't
years.
have the crystal ball for that one.
So
I get asked that all the time, and I'm like, I have no clue.
Well, I would say, I personally think that they'll drop a little bit.
Yeah.
But
they're not going to get to the 2.5 that we have on our house.
No, absolutely not.
So keep that if you want to.
I'd say keep in mind they're going to be relatively similar.
Yeah.
But the great thing about this current market is that some of these homes, these sellers do want to sell them, and so they're willing to negotiate some pretty great seller concessions that we can utilize towards lowering your rate that you normally wouldn't have, that you would have to come out of pocket for.
Right.
And so if you can have the seller buy down your rate maybe a whole %,
right.
I mean, that can make a world of difference.
That's where you need to have a great agent that can negotiate all that
Absolutely.
for you.
Yeah.
Too. So
that's huge.
In the buyer's market that we have been in, except in certain areas, like you said earlier, there's some that move off the market pretty quickly.
Yeah.
But then there's still areas where they might sit a lot longer too.
Mm-hmm.
But like I say in my previous YouTubes, it's location, price. It comes down to price anyway. Location, condition, and price. So, and you can't fix location. We can't take a house and pick it up and move it.
Yeah.
So you have to adjust price. But condition, you can usually tweak things at home and do things, and then it still comes down to price, doesn't it? I mean, price
absolutely.
is what drives people.
Exactly.
And that's why people have been scared to take the leap of home ownership. But like we said earlier, it's do 100% or 8, 7, 6%, whatever it may be, at the time of buying. And you can always, if they go down enough, refi and call Jake back and refi it later.
Yeah, and I was thinking about this the other day. Many of the houses that I've bought over the years, I personally thought that I would not be able to get into a home like that. But, lucky for me, I'm able to check the numbers right on the spot. But I would give that advice to people out there. If you don't think that you can take that next step up, don't sell yourself short. I would say talk with the lender. There's no obligation. We can even do, a soft credit pull, so there's no inquiry on your credit. But I'd say that this year, if you do want to move up, let's set some goals, but at least find out what you need to get there. At least, put it on your vision board, put it on your in your journal, and see what's possible over the next year or two.
Yeah. And it may be sooner than you think.
Absolutely.
I've had clients over the years that they're like, I didn't even know that I could even buy.
Exactly. Yeah.
I've had clients say, I don't think I have enough money to buy. And they might have $30,000 sitting in the bank. And it's like,
oh, yeah.
You've done better than most Americans, you know. You have money in the bank. So you don't want to use all that just to buy a house. But there's options, like you said, 3.5%, 5%. You can do 10, 20, whatever you want to put down. Some do half.
Yeah,
I mean, it's up to you.
Even people with a lot of money still do lower down payments because their strategy works out for them. So
there's a plan out there for everybody.
Exactly.
Like there's a house out there for everybody. There's a piece of land out there for everybody. So
couldn't agree more.
Yeah. Well, thank you, Jake, for coming.
Thank you for having me.
Yep. And you'll have to come back and update us as we go on how the market is.
Absolutely.
For this year, and we will see. But if y'all like my videos, please like, share, and subscribe, and I will see y'all next time. Bye, y'all.
Bye.